Welcome to the Twomey Stock Market Report. Today is Tuesday, May 10th, 2022, and I'm James Twomey. Welcome aboard. Today's segment, let's see, we're going to pick up a little bit of where we left off in the previous segment. Picking entries and exits, bull-bear case. Basically, how do you decide when to enter into a particular stock or ETF or whatever you're trying to trade, and when's a good time to either exit or have your stop? So we're going to go over some of these today. It does get in the weeds a little bit, so I'm going to try to break it down, show you some real examples with some stocks that are in play and that we've talked about in previous segments, and potentially allow you to learn some of this process. It's the Twomey investment process, and it's something that I've used over the years. It is very helpful, and quite frankly, as we talked before, you come up with a plan, and oftentimes that plan is based on the Twomey investment processes that I use, but you could use your own. At some point in time, it forms a bias. And of course, a bias can be great when it's working in your favor, but if the market takes a direction or things change that we're not watching, then we need some type of technical indicator to either A, alert us, B, stop us from jumping over the cliff, or C, reinforce that our bias is still active, right? So we're going to talk a little bit about that. This is the basement tapes version. There's no charge. I'm just getting this information out. I like to talk about these things. I do trade quite actively. And, potentially if I could help you, great. If we can mention some stocks, that's good. I know last segment I mentioned Bitcoin. I don't trade that. I do have an ETF that we'll go over at some future segment that I do watch and been in and out over the year. However, as soon as I mention things like Bitcoin or gold, it really opens up the gates for a lot of emotional response. I saw a couple of postings or responses. I'm not advocating Bitcoin right now. Anybody posting websites out there, mine's free here. I'm not asking, I don't endorse it, nor do I recommend it. That I'll leave that totally up to you. I just want to, as far as Bitcoin, 6 months ago it was at 65, and it's at 30 today. So you make the decision. I'm certainly not in that game. All right, with that kind of caveat alert, let's move forward. So what do we do? Entry and exit points, tips, Twomey's investment process. Does it form a bias, or is it something that's active and correct or wrong? So those technical indicators help us out to choose. We're going to go over those again, how I identify a point to jump in a particular stock. Also, tonight we're going to take a look at the shorter term time frames in a stock day trading. I'm not saying advocating day trading, but during the day, these shorter time frames will tell you or potentially predict where the daily and weekly charts are going to go. No guarantees, but it is something that you can watch and double check. And I've got a couple of good examples that we can do. Okay. Again, what are the Twomey investment processes or tips? General market trend, macroeconomics, environmental facts, Fed policy, government regulations, biases, tax philosophy. Go into a blender, chew them all up, come up with some kind of short-term trend to trade off of, right? Here's a good example. Remember I talked about I listen to a lot of information, but I'm really trying to understand the noise that's out there. And a lot of times that people are touting something, they're selling out the back door. So tomorrow, CPI, Consumer Price Index. What is that? It's the measure of the average change over time of prices paid by consumers in a basket of consumer goods and services. These things do not include rent, but they include like food, gas, oil, those kind of type of things. So basically your day-to-day cost. Now, we know that the inflation number has been running hot and it's been increasing, highest in 40 years. what happens at tomorrow at 8:30 when it comes out and it comes way down? Well, that's going to be a real positive for the market. You're going to get a big kick. Is it really high? Will it be the opposite and drive the market down? Potentially. So tomorrow morning, you got to be a little bit cautious. If you are trading, there's going to cause some fluctuations. And in this particular market, I'm just careful for anybody taking a position unless you're a real active trader. Overall, the market is really oversold to some extent. The buy the dip philosophy has been in play for years. So I think there's a mentality, and I'm not saying it's right or wrong, that's prevalent out there. That if it gets low enough in people's mind, they're going to start buying. And anytime there's a larger volume of buying and the market goes up, you have a opportunity for what we call a short squeeze. What's that? All these people with shorts, especially if they're margining their accounts and they're borrowing half of what they're trading, these shorts, they come down really fast, so they're really attractive and they make money quick. If there's a squeeze, that market and the market reverses and it goes up very quickly in that short period of time, all those people are selling. So as they sell, they actually help drive the market up. So anyways, we're in that kind of risk environment right now because when you see the volatility of the market the way it is, what do I mean by volatility? Large swings up, large swings down, and we've certainly seen that. Last week we had 1,000 up, 1,000 down, and that was on some type of news. I figure out what it is now, quite frankly. So anyways, CPI is coming out tomorrow, may or may not affect. I can just tell you this from being an older guy, inflation doesn't appear overnight and it doesn't disappear overnight. So whatever that number is tomorrow, I think inflation at 8.5% was the last number. It's here for a while. Okay. What are our short-term indicators? I put this slide up. You can, maybe take a print screen of this. I'm going to talk tonight a little bit about stochastic MACD relative strength index. I talked about it yesterday. I didn't really define it. You can Google these. Investmentpedia has the numbers that you should use and how you can place it into your stock charting. And eventually, we'll do a 101 on for those who don't have a stock trading platform. I'll go over that and how to set one up, etc. So, but in the meantime, let's just assume that you've got some access to some graphs out there on stock trading, and you can overlay relative strength index, which is basically it's telling you how strong the market is. Is it overbought or oversold? A level below 30 indicates the market is really traditionally gone too far in the selling, and it could be a bounce. And that, when I say market, it could be an ETF, it could be a stock, etc. Overbought, when you're up around 70, it's saying, hey, the market, if everybody bought who could bought, there's nobody left to buy, right? If everybody sold who sold, there's nobody left to sell, and there's a lot of people that want to buy. So, it's kind of like retail, right? Stochastic oscillator. Oh boy, this is, again, in the weeds. It's an overbought, oversold strategy. It's used a lot in, indicating stock strengths, etc. It's used a lot for trade, exit, and entry. The period that I recommend is 14.3 and 3. Again, Google that, Investmentpedia, and it'll explain. There are some other different, recommended, and I would take the standard one, whatever they recommend. I tend to do it based on the close of the day. Buy signal when the stochastic indicator is below 20, and when it rises above 20, we watch that, and then when it starts getting up in the 80, 90, it's the opposite. You got to watch for that to reverse. The MACD, it's a much slower oscillator, and it's, again, it identifies the market, and it's a good gauge of momentum of price changes. It calculates the difference between the 26-day and the 12-day EMA. And how I like exponential moving averages because it smooths data over a period of time. If prices are rising, the histogram, or I use a line, it will grow larger as the speed of price movement accelerates. And converse to that, it contracts as the price he accelerates. It's a slower period. I use 12, 26, and 9 than the stochastic oscillator. Relative strength index is, something else. I also use, and I didn't put it in here, I use the 10 EMA and the 15 EMA, and that's really the number, that's really the indicator I use to get in or get out. I tend to use a tighter one. People sometimes recommend 15 and 20 or 10 and 20, whatever. You just got to get something that you're used to. I use it because a lot of times I'm trading the 2Xs, and they move really fast, and I want fast indicators. So I'm gonna talk a little bit about these today, a little more in the weeds. I'll look at it on the daily chart. You can see it real time, somewhat real time in some stocks, how we're making decisions. See if you can incorporate that into the stocks you choose, or if you want to play the ones I'm talking about. I also start looking at the 60-minute and the 120-minute. So basically, it's if you open up the stock market after I'm graphing the first 60. I go 5, 10, 60 minutes, and 120 minutes. So I want to see all these items and how they're moving after the first 60 minutes, the second 60 minutes, etc., until the end of the day. And then I also, break it into a bigger 120 and then the daily. Why do I do that? Because I'm trying to have, will the 60 move in a direction, positive or negative? I'm saying, okay, is that influencing a longer term period, the 120? Is a 120 kind of following suit or, heading the same way? Well, that's a confirmation. And then is it the same? Is that 120 move, influencing the daily and it's following wherever the 120 is going up or down? Again, that's helping me, make some decisions. It's influence me if these oscillators are moving in the direction towards it, taking a trade or exiting. All right. What we're going to look at, we'll look at the Qs, the diamond, the short inverses of those, the dog, and the PSQ. UNG, SCO, those are oil and gas, natural gas. TBF we talked about, TBT, that's the 20-year Barclay bond. SCHP I'm introducing today, that is Schwab's 10-year Treasury. It's basically inflation protection bonds. Verizon's one that, I don't know if we talked about it before, but that's been on my radar. Basically, Verizon, actually, this was, I was listening to something, I don't know, it was CNBC or Bloomberg or whatever, and some guy was touting Verizon as, an opportunity to buy. And the reason he was touting that was it was trading at 9 times earnings, which is pretty low, right? And of course, these stocks are, AT&T, Verizon, they're not real movers unless some major news is coming out and a game changer, if you will. So you don't really have a high-flying multiple like Tesla would, or Moderna, or something of that nature. So with that said, I know the overall market's been trading around 21, 22, 25, and last recession was down at 10. My antenna went up and I took a look at it. I saw it Verizon. We'll look at that graph. It had a big drop, and it also was paying a juicy dividend of 5 or 5.5%. I said, well, what are my indicators telling me? Do I take a position here? And then those indicators, am I adding or subtracting or getting stopped out? And the two reasons for that is, at a very low multiple of earnings, 9, can it get down below that? Sure. If the market really tanks, and a 5% dividend, let's say I buy into it and it kind of stays flat, the next 6, 7, 8 months or a year, I'm still going to make 5% on my investment. That's pretty good in this kind of crazy economic environment. If it drops, 2, 3, 4%, I'm still going to make 1 or 2%, and that's really what you're getting with a long-term treasury. Anyways, XLU, let's review some of our 200 EMAs and how it works with technicals as well. Okay, so let's see. Let's jump in here. What chart do we want to take a look at? All right. inverse. The dog, this is the inverse of the diamonds or the Dow. Let's first take a look at the diamonds, this daily chart. All right, so we'll go over our indicators. Down here at the bottom is the stochastic, right? You can see how the red and green line, and then it's a 0 to 100 in the graph. Basically, the green line, when it crosses above the red, that's a positive indicator. Well, if we go back, I don't think this goes back that far. Let's see, this goes back to the beginning of the year, right? We've got a lot of green crossing the red, up and down, up and down. So if you took a trade every time, this is a daily chart, every time this crossed above the green, and you sold every time it dropped below, all right, so let's say this told you to buy here, this told you to sell there, rode all the way down, it told you to buy here at a low, and then in and out, in and out, in and out, in and out, and then here, then you're in and out, blah, blah, blah. So you could see in this particular case, it was a good indicator, and you got a pretty good run. Unfortunately, the demonstration here, if you buy and sell every time at all these inflection points, probably, sometimes you overtrade and you lose, especially if you're going to pay for that trade. But there's a lot of free trading out there now. So, and you got short-term, long-term capital gains. These would be all short-term capital gains, tax at your nominal tax rate. It's costing you a lot of money to make a few bucks. So that, to me, it's a great indicator in some cases, but it's a little too, I'm in and out too often. So now I look up the next indicator, that's my MACD. It's another divergent type based on exponential moving averages. Again, it goes from, there's a zero line in the middle, and below that is negative, and above that is positive, right? And every time the green crosses above the red, I'm real interested in potentially buying. When it drops down, I'm real interested in potentially selling, okay? So as you can tell, only this year we had one inflection, 2, 3. Down here it's kind of sideways, 4. I guess you count that as 4, 5, 6. So it's a little less in and out, right? You're still going to, if you did follow that, you could probably make some money. But it is, again, in and out pretty fast. So that now I go to the next thing. The next thing is my 10 EMA and 15 EMA. 15 is this gold line, and then 10 is this black line, okay? That I'm more interested in. And anytime the black line crosses above the 15, to me, that's telling me that's a good entry point. So my first step is I'll look at what's happening down here will give me an alarm. Well, this one's a little bit hard to take a look at because back up here, up here is when we had, I can't move it here, sorry about that. Over there, we had a indicator that told me to sell, right? So that was the 18th, right? So on April 18th, crossed this 9 EMA, 10 EMA, and the gold EMA. Well, actually, let me make this bigger because I think I'm ahead of myself. Yeah, it was actually a cross down below here. Excuse me, on the 422. I had it right the first time. But anyways, with that said, I'm out at that point, right? And down here, over here, this is where the green line crossed below, and it definitely crossed below here. We had some up and down, but it then crossed below here, very, very near that. And my fast oscillator, obviously the green was crossing down below here, but the green started crossing down below way back here, which was on the 330. So the fast oscillator will give me a little bit earlier warning sign. The next oscillator, which is a little bit slow, starts to, my antenna goes off, and I'm saying, hey, wait a minute. This one's now saying sell. And there is a big difference if it's above zero or below zero, but just for now, let's just get the concept down. But then when this is happening, I look up my daily chart. Well, my 10 EMA is still above my 15. That's a good thing, because typically what's happening, these two EMAs that I'm using, stock price kind of uses those either as support or resistance. Pretty much it's been, in this case, it was using the 10 EMA as resistance, and then once it crossed above and we had an inflection point here, which would have said get in, it's using it as support. And then over here, as it crosses down, what happens? The reverse. It went from providing it being a support EMA is now be a resistance EMA. Okay, so that's what's telling me about that particular chart. Let's look at the inverse of this, because this is more real time. Because the market's short, I've been short, and here was my decision. Okay, back here on 329, I was been tracking. I was looking at the stock market. Certainly, the trend was down, right? But 329, all of a sudden, for a couple of days here, I've got the red line. It crossed down below the green line, and it really kind of came down here, and then the green started popping or wrapping around that red line. So my antenna said, it's way at the bottom here. Like I've said before, when things are at the bottom, a lot of times they'll bounce, right? Or they'll stay there forever. But I know it's not going to stay there forever. So it went sideways for us. So the end of March, my antenna's up. Hey, something's about to change. This is the short version. This stock may be ready to poised to take off. I look up here over my daily chart. Well, there's the 10 EMA is still acting as resistance, so not a good time to get in. I look at my MACD, it's still, the green is still below the red line. And then all of a sudden down here, there's some sideways couple of days, and the green line's starting to pop above the red line, right? And this faster stochastic green line has popped way over the red. It's up in the positive 70, 80. It really has my attention. This is telling me you better start getting ready to take a position. And then I look up here and I see this is really getting close. First of all, the 10 EMA and the 15 EMA, they're almost ready to converge. The stock price is kind of staying above it here for several days. It's giving me conviction once that cross takes place. You could have gone in here, and I would have supported that. There's some sideways move here, so you can't, let's see, you're going from 32.5 to 33, a half a point. That's pretty good, because you probably would have had a stop from your last low area. So you probably would have stayed in. We ran into that 1,000 point up and 1,000 point day, but that happens. But over here, I start seeing, this is where it's below the 15 EMA. And this is kind of dropping down here, and I'm a little nervous. So if I was in, I would have got out. And then all of a sudden, it pops back up, and now the MACD is up above zero. The green crosses; it's up above zero. And now I'm Robin Hood. I'm ready to go in and steal from the poor. I mean, steal from the rich and give to the poor. Me. So here I go. Bingo! It crosses. I'm all in. I take the risk. It's a big day here. The market's up. It's heading towards my 200 EMA. I'm all in. I'm ready to run. And sure enough, it's been up here all the way. And what I do, and I've said this, as I said yesterday, every day it goes up, I use the 15 EMA as my stop. So I just keep moving my stops up. And this day I would have got stopped out because it would have came below, but that was a 1,000 point down day. Then the next day I woke up and, the carnage was over. Market was going up. I mean, the market was reversing, coming back down. I immediately jumped in, and I'm glad I did. So, yeah, there's some, just like when the CPI came out, I already forget what that number was all about. Oh, it was the Fed raising rates, right? Okay, so there you go. That gives you a little bit of an idea. Now, I talked about earlier indicators. So that's the stochastics, a fast indicator. Do you trade off of that? You could, but you're in and out, in and out. It's costly. MACD, not a bad way, but I always wait until the daily chart convinces me. But while I'm waiting, all during this area here, right, and well before this happens on the daily, I want to see what the earlier time frames in the market are doing. So I'll look at the 60-minute, 120-minute. So any given part of the day, I'm trying to make my decision. I'll look at the 60-minute. And if we look back, this all-in day was what? 422. So let's go back to the 60-minute back on 422. 421. What was going on with my indicators? So on 420, 421, I'm looking, I'm like, hey, on the 60-minute, this is at the bottom, right? The stochastic, and it's green and red are bumping up and down on each other. Market's either going to turn or, who knows? But I'm thinking this stock may take off. I'm going to keep my eyes on it. And I'm looking, the MACD has kind of a nice bump right up, the MACD, and now it's above 100 here. And that was what, 421, almost exact time frame on the daily. And sure, it pops up. And here's a great example. The 10 EMA is acting as resistance. All these things cross over. I'm in here. If you went in here, now it's using it as resistance. There's a lot of fits and starts along the way, right? But the daily kept me in the market. Would I trade the 60-minute? Keep in mind that you probably, that's almost like day trading, right? So it's just telling me I'm just trying to see if the market is going to follow that way. So, this could be a blip. Remember, this is everything to the right of this hadn't happened yet. So I'm just kind of looking, I'm like, well, over here I don't know, is it going to go up, go down? I'm just, based on technicals, it looks like it's going to springboard. I look at the 120-minute. Is the 120-minute kind of following suit of the 60? So let's look before 422, 421. 120 minutes, a shorter time frame. It's every 2 hours of the market information is capturing. Back on 420, our fast oscillator. Hey, it's moving, and it's moving. It's up in the 80 here on 422. Over here, it crossed above on 421, 422, 422. It's now using the 10 EMA as support. So now, if I'm trying to make decisions as the market is moving, on 420, on 329, all that, I'm also looking at the 120 and the 60. I see the 120 is really making a move up. That's telling me, hey, 60 is kind of moving up. The 120 is moving up. Will it influence the daily? Probably, right? Probably. And opposite, if it was reversing, it would. So here I go. I made my decision, and it happened to be a good one. Okay? So that's how you use the EMAs and how I make my entry and exit. I already talked about stops. Once you're in, you want to take, the last major low. In this case, I'm in here. I'm going to give it room to kind of develop because it just crossed over. So I would have been in, my stop would have been around 32. All right. It makes a nice run up a couple of days. I'm saying, hey, I got to move that stop up. I would probably go to the day I got in, 32, or I'd start using the 20 EMA. And when I start using the 20 EMA, I'm kind of tempting the market to take me out because, it's usually a support area or a resistance area. Okay. Now, I mentioned relative strength index. Oh boy, is this really something that's accurate? Maybe that's just future pink line. I use it in a kind of a short duration time period, 14 days, but You can Google it, Investment Peter. They'll give you some time frames to look at that. Basically, I'm getting in here. I'm saying, the relative strength index is telling me that the stock, this particular stock's gaining strength. It's coming up. It's reversing from below. Oversold is around 30 and overbought is around 70. Okay, so this number here for the relative strength was 39.75. Up here it's 61. So right now it's at 63. Are we getting into an oversold area? Once it hits 70, my antenna is way up. That's assuming everything's still positive and I'm going in the right direction. Okay. I might have been stopped out before that. I don't know. But there you go. So I kind of use the relative strength index. I'm really more interested in the 30 and 70. 30 means it's oversold. 70, it's overbought. Those are warning signs. Let's see. So hopefully that gives you an idea. Let's take a look at a different stock because we'll come back to these indices. SCO. I don't recommend trading this. This is a 2 times. We already talked about ETFs. That's an and stocks that are 2 times. Stock vehicles that are double your up or downs. But it's a good example because I was in oil. I got stopped out. I got back in. I got stopped out. This whole oscillator stuff, right? And I'm out now, right? Same thing with natural gas. I was way up, and then bang, it went down 10%. And I got out, and then it went down another 10%. I actually bought some today, but commodities are their own animal. I don't recommend commodities for the novice, and even for the expert stock traders. I don't even like to trade commodities, but as I mentioned in the last segment, when my portfolio starts showing up with a lot of commodities and other stocks are getting stopped out, I start realizing the market is making a major shift. Why do commodities go up? 2 reasons. One, during recessionary periods, real goods become more valuable, I guess. I don't know. People flock to gold or precious metals because they feel they're going to retain their value. Oil generally gets cheaper because during recessions, people are the consumption is less and they stop buying oil. We've got other factors driving up oil now. But anyways, there's a lot of factors. A lot of times commodities are trading the future. Like I think natural gas is trading June prices now. So, natural gas should not be as needed during the warmer months, other than for AC and cooling, but certainly less heating, and it typically comes down. But the war and environmental factors. So what am I saying? You're just going to be really careful. But this one's a good example. So once I get stopped out a few times of oil, I'm like, I say, let me look at the short or the inverse of oil, and this is the ultra short crude oil 2 times. So it's the inverse. So when oil goes down, this goes up. And here is my daily chart. So I went in yesterday, the end of yesterday, and I went in, I added to it today. Why? Because I look down here, I'll take a look at my stochastic, fast stochastic, and I saw the green crossed over the red very, very steep and high and fast. I was also looking here that the MACD, it was up. It's still under. Anyways, it's up. We've got the green inflection point. It started back here. It's up here. I look at the daily chart, and it hit the last bottoms. One here came down and broke that bottom. Came down here, broke that bottom. So it's 3, this is the daily now, 3 shots at the bottom. 1, 2, and this is the 3rd time. It broke each time, but it's now rebounding. In addition to that, I looked up here yesterday and I said, geez, that 10 EME is getting close to the 15. I got a little ahead of myself, yes. But I said, hey, if I go in here, I'll put my stop down here, but both, that low, 5 to 4.8, 4.6 or 7. I'll take that risk. But I also took a look at earlier time frames. I looked at the 60-minute, right? And what was it doing at that time yesterday? Where was yesterday? 5.9, right? Trading down here, my fast stochastic model, straight up, rocket right up into the 88. MACD had crossed positive. I'm like, wow, that's pretty good. But look here, right? First I look for this to get my alert. Once I get that, I'm really paying attention, checking it really often. And then this crosses, bingo. I'm like, but I don't trade the 60-minute. But I'm like, boy, I should go in. Yeah, so I'm again, biased, anticipation. I'm looking at environmental. Why is oil coming down? I can't tell you. I don't think it should, but with all the stuff that's happening over in Europe, it is what it is. But I'm not going to let my bias tell me how to trade. Well, that's why I have these technical indicators. So I go to the 120-minute just to cool me off a little bit, see what's going on. And I'm looking at what was yesterday, the 9th here. So the 9th, same thing. This is way up. This is a huge volume purchase at whatever time this is. And again, early in the morning, green pops up over the red. And I go up here and bingo, my third indicator has kicked off. Wow. Right? That is crossed over positive, All while the price has gone from here, whatever that was, 4.6. When I'm seeing this, it's up at that particular time is 5.1. So that's what forced me or decided I'd take the risk. I'm also, kind of going into the weeds further here, but when there's a gap here between this number and this number, there's basically all these buyers, there's no resistance of sellers because the last time people sold, they're up here. So I have no competition. I buy here, there's nobody typically selling. But when I get up to here, I got all these people who were in, the market went down, they're going to think about getting out, right? So that's I talk about inflection points. So, that's kind of an area that you got to pay attention. Well, it's above that. I'm looking now in a rearview mirror, but actually I'm looking at it for the first time because I was on a golf course all day. It's above that inflection point. So that I took a risk. I got in early yesterday. Early, it was I didn't see the cross up above, and let's face it, we still have not made that positive indicator to buy. So I'm still ahead of myself. I've got my stop in. I think it was like at 4.8 or 4.9 this morning. Will I raise it? Yeah, I probably will. I'll probably raise it up to 5, but I'll take a look at it. Depends how much you have. You can buy a lot of $5 stock, but, when you're buying hundreds of shares and they move really, and it drops a half a point, and you lose a half a point on 1,000 shares or whatever it might be, that's a lot of coins. So you got to be careful. But I thought it would be a good example of my fast and slow stochastic. Okay. Let's look at, we looked at the Dow. Let's look at QQQ real quick, Nasdaq, because that's certainly a weak indice. Technology is getting hammered. I read somewhere there was like billions of dollars in the last couple of days that value wiped off in these companies. All right, today was, certainly a little bit better day than yesterday. We did not break yesterday's low. What did we talk about yesterday? Conviction. If it hits this low and it bounces off that low area and it starts moving up or sideways, we're looking for confirmation that the low is going to hold. or the low or the high is, whatever it is. Okay, so you got to be careful. The trend line. It's this. For some reason, this chart is hard to work with. There's a lot of, I use Schwab. For some reason, the Q chart, there's a big, huge delay. Anyways, the Twomey track trend line here, is TTT, the Twomey trend track is what I call it. Hey, people have been using trend lines since the beginning of time in stock trading. There was one guy, I forget his name now. I mean, he made a living off of trading stocks based on just these trend lines. I guess he did pretty well for a while. Anyways, I use them. Do I put a lot of faith in them? A little bit. I mean, you just got to get used to them. It depends how you draw them. Anybody can draw a line. Is it accurate? Is the one that the stocks are following? I kind of look at it as kind of like a rear view mirror. But anyways, this is down around. If I can move this, it will. It keeps going lower and lower, right? I'm just going to look at our golden, the 20 and the 10. That was negative way back here. Nothing's changed. Okay. I'm not even. Is this changing a little bit here? We had an up and down. Maybe. Who knows? Am I going to buy? No. I'm still short. I'm staying short. So let's look at the inverse of that, and that's PSQ 1-to-1. Actually, I'm trading QID, which is this 2 times. So it's a little more volatile. But I want to show you this one. Okay, let's use our technicals. When was the last time this crossed above? Right here, right? See, I haven't even marked up this chart. So this is a good one. All right. That was a good time to tell you to get in. Was it accurate? I'll say it's pretty darn good. Right? You've had a bunch of days up there. It hasn't crossed back down. What was the early warning signs down here? Even though it was it was below zero, your MACD was a little bit slower, gave you a nice alert. Well, if you're looking at it, that is, right? And how about our faster oscillator? Well, down here, we certainly had the inflection point change, but really it was all happening all around here, right? So you had plenty of warning time, or if you're watching these charts that are, right? You got in? Not here, no. Did you get in here? No, but could you have? In this particular case, yeah, it would have been a good time. But I waited until I saw the confirmation. The confirmation said, jump in, go all in, use this, raise my stop. Again, when I first get in, I want to give myself some room. I would have gone to like a previous low down here, 17.5, 17.7, or even further. But I want to give it time because I want this to develop. I'm willing to risk a little bit more when I first take an entry. But as it started to climb, I raised my stop. I kept it below this 20 EMA, knowing that things move rapidly. Hey, look at this, our blue line, our 20 EMA. What happened? Hey, it got up to the 20 EMA. It kind of bounced up and down, and then it became a rocket ride above the 200 EMA, and it went up, and away. Okay. At some point we'll go into this. I wouldn't put a lot of stock into it now. The 50, which is this future, crossed above the 200 EMA. It's what they would technically call a golden cross. The opposite would be a death cross. Usually when that happens, things are going to go up, and it's going to go up for a while. It's a good sign. It's a good thing. Relative strength index. When I went in, the relative strength index had moved up. It was at a value of 57. Down here it was a value of what? 35. It wasn't quite below 30 when my first indicator kicked off, but I'm like, hey, that's near that 30, telling me it's oversold. This is the short inverse of the Nasdaq now, right? And it's progressing upwards. And certainly when I got in that day, whatever the heck that was, whatever that, it's hard to tell exactly the day, but it was probably around 50. Hey, it's not 30 and it's not 70, but it's went from 35 to 50. Another good indicator to get in. All right. If I had gone back to my 60-minute, kind of predict my way, what day did we get in? There's going to be a little bit of revisionist history here, but 419 is when that happened. So let's look at around 419. Where the heck was that? April 19th. What was going on around April? All right, so here on April 20th. Okay, so back April 19th. So over here, April 18th, our stochastic is negative, right? The green crossed under and it's red. And then down here on the 19th, we're getting some action. Wait a minute. What day would we go long? Yeah, it was the 19th. Okay, so we're looking at the 60. That's not giving us any, up here it started to give us some back here, what was this, 414. We got some positive influence there. We got the green. It hasn't gone over the red, but then it started going over the red. Now, the 10 EMA is now up above. Could you have gone in there? Maybe, and that's what, the 14th. But there was fits and starts, and it came down, and all right. So, but by the 18th, 19th, 20th, what goes on? Okay, boom, we get a big hit up here. We cross over here on the 20th, and we're just starting to see everything cross over from the 10 EMA to the 15. So if those days I'm starting my antennas up, I go to my 120, back there on 420, and 418, 419, negative. Up here it starts going positive. Here on the 20th, I'm not still convinced. Then over here it makes the change. We're still on the 20th, 21st. Makes the change on the end of the 20th, beginning of the 21st. So we're in by then on the daily. Though this is it accurate to some extent? The 60 and 120 will start. You want to look at those. It gives you a little bit of an indicator. Is the 60-minute moving up? Is the 120 moving up? And then is the daily moving up? Or is the 60 going down? The 120 was up and the daily was up, but the 60 is going down. And then the 20 goes down, 120 goes down, and the daily is eventually going to potentially go down. So it's a good inverse to look at. So that gives you an idea how to use entry and exits and set your entry points. And I think that's more important. You want to feel like I've got a bias. The market, let's look at what the Qs were doing on the 422 or whatever, 421. Let's just take a look at that. 420, 412, 422. It was still pretty down, right? I mean, Nasdaq's been going down for quite some time. Okay, so you're getting in, to make a decision to get in here, forget the stuff to the right of this red bar here. But you're like, the next low is here. It's bounced off of there 3 or 4 times. If I go short here, it might, there's really not much room before it hits that. And the previous time it bounced off. And sure enough, it kind of it did bounce off. So, but that's why I use these oscillators and stochastics. And, I started going, going short here. Hey, there's a lot of distance between this number or even this number the day before to get up to the 10 EMA and then they get up to the 15. I mean, the 200's way up here. The trend is down, blah, blah, blah. my bias, etc. So let's see. Let's look at some other stocks. What else we were going to look at real quick? I'm kind of going over time. UNG. Let's do that real quick. UNG. Again, I don't really like trading these, but UNG. I got back in today. The daily. There's no reason. Look at there's no reason to really, even get out of this. But I had got out of it because it had dropped like a stone. And the reason why is because commodities are very difficult to trade. They move extremely fast. Even when I'm buying some of these, Schwab has a box I have to check to say these are very volatile. Do you really want to trade them? So they're trying their best to warn me as well. But I got out and thank God, because I got more pain down here. But I decided to get back in. And why? Okay, because I had seen some of the fast stochastic. I saw some of the MACD going on here. Let's see, today's the 10th, and up here I got in yesterday, I believe. Yeah. So I was looking at all this from here to here was kind of sideways. So anybody who had bought, if it starts going below there, I've got to contend with all these people who, over here bought and sold it are going to get out, right? But I'm looking here, hey, there's a fair amount of people that are buying and selling of equal over, 7-10 days. So I said, hey, that's worth a risk. My 60-minute, yesterday was the 9th. Where was the 9th? 9th. I'm looking down here. There's my one, right? I'm looking for 2. Didn't happen yet. And I'm looking for this up here. Didn't happen yet. But it's above the 200 EMA. You really don't put a lot of stock in it. Then I went to my 120 yesterday, and I'm like, nowhere near my 200 EMA. The 10 still below the 15. Not a lot of good positive signs here. Number 1 alarm goes off, and number 2 alarm not even close, right? That's telling me about, only thing that's telling me is not much, right? Go to the daily, it was a little bit of a, hey, I've had a lot of profit because I've been in here way down here and I had a nice run. When I'm flush with a profit, I'm willing to take a little bit more. I have some other technical things. I use Fibonacci once in a while. That was hitting coming down towards 3.82. I said, I'm willing to risk a little bit and, see if there's a major bump. Right now, I got a tight stop. I'm not going to hang around a lot. Verizon was a new one that I wanted to look at. I don't know if I talked about that before. I did talk. I guess I did talk about Verizon, right? We talked about a little bit how it was trading down 9 times earning, pretty good, right? So here I am, the daily. I got in the last couple of days. My first warning sign. Yeah, the green's above. It's still pretty low. The green is still below in the MACD. Relative strength index. That was trading at what? 23.88. It's 9 times earning. I'm also looking at this. It has been sideways for a long time, and a big drop here. I'm like, wow, when was the last time it was down there? I can't even find one, So I'm like, yeah, this is pretty good. I brought in the weekly. The last time it was way down here. The guy was recommended it. There's one. I'm going to give it a shot, right? And I've been in there a few days. I added to it. It's been positive. I've got my stop in there, down around this low. We'll see where it goes. 60-minute. Has anything changed there? Started, popped up here back on the 5.2. So when I started looking at it, and then the MACD is crossed over, it's the 10 EMA and the 15 EMA is kind of used as support. It was my warning signs were saying, hey, that's a positive. How about a longer term? Ooh, yeah, back here on the Oh, that's a little too far back. 5.5, and then of course up to 5.9, where I was buying, or 5. Well, actually 5. I didn't. I think I might have bought some yesterday. I don't know, but here we go. That crossed up, expanded quite a bit. MACD. Hey, that 10 EMA is over the 20. Yeah. So that gave, I based on how it was beaten down and I was seeing it's rebounding, it could be just a dead bounce, and that's where maybe Fibonacci comes in, throwing a lot at you, but Fibonacci, let's say, or Fibonacci retrace, the first bounce up to 0.23, up to 0.382, if it's going to die, it's going to die around here. If it's going to bounce more, probably get up to about 0.5. Fibonacci retrace, that's 50. It's a nice bump. But I went in a little early. I'm watching my technicals, and we'll take it from there. Did I have some others I wanted to look at? TBF before we go. TBT, TBF, those are the bonds. Remember I opened up my first segment? It was all about inflation. The Fed's going to have to raise rates. We looked at the last recession. The TBF was, if we go up the monthly, let me pull this as far back as this computer program goes, the Great Recession 2000, 2009, it was up around 51. And, when we talked about it a couple of days ago, it was around 17, 18, right? I mean, excuse me. This is the monthly, so it was around, 18, 19. So I'm like, chances are Fed interest rates going up, it's going to go up even further. I like this. Look at this W here. I like the W pattern. I call it the Halloween pattern because it looks, many years ago when I was trading, I was trying to be more of a day trader, I saw that pattern and it was like, started a day high, I come down at this little grin down here, and I'm like, oh, I can't stand the pain. I get out, it goes back up to here. I kind of repeat the process, in, out, and at the end of the day, it was up there, and it happened to be Halloween. And I'm like, oh, that's a jack-o'-lantern, grin. But subsequently, since I've learned from that, this W pattern is a pretty good pattern to trade. In other words, once it breaks above that midpoint there, it's a good chance it's going to go up further. This is probably called some kind of, professional technical thing there. But anyways, wealth of, as my history teacher in high school used to say, I'm a cesspool of useless knowledge. Guy was a bright guy, and I never heard any of my college professors, or even in grad school use that term, but this guy, Mr. Hurd, he used it all the time, and I always thought that was pretty cool. What am I talking about? TF, that's the weekly. All right, so the daily, it's come down quite a bit, right? It was at 20.61, now it's at 19.88. My philosophy has been every day I wake up and it drops a little bit, I'm nibbling, I'm nibbling and adding. I kind of keep my stops, around the 20, this 15 EMA. So I keep moving them up. This to me was a big drop. That got my attention. I'm looking at my technicals, early warning signs. This is dropping down. Warning sign here, sideways, but now it's back over in green. So you can see there's warning signs starting to emerge. My second indicator is a warning sign emerged, but it kind of repelled it. Up here, there's still plenty of gap between the 20 and I'm sorry, there's a lot of movement here, but there's a lot of gap there. But it's also a very steep rise. We talked about that last time. I'm doing my Twomey 10, trend tracker there. 1, 2. It's pretty steep, right? So things when they go straight up are bound to come straight down. So anyways, I'm really cautious. I'm wondering if that's going to change. I don't know. 60-minute, what is that telling me? You know, where before, if it's kind of moving upwards, and the 120 is, well, this is since, you know, the 9th. So today's the 10th. You know, it's been coming down. Right? Relative strength index right down here was 30, 40, 37. You know, I'm saying it's oversold. It's going to go up. You know, so what the 120 is telling us. 120, the relative strength index, 45. So that dropped pretty bad, but it's on the way back up. Wow, look at this warning sign. A lot of sideways movement. A little bit of a warning sign there. I put it in yellow, and the green popped up. Warning sign 2 is ticked off. This, and look at this, how much that stochastic is down, right? So you're getting the idea. But hey, what's going on here? My 120. I'm going to put this in yellow. Now I'm really interested that something bad is about, well, bad, or that, you know, I don't want to hang around, right? Our magic number, the 10 and the 15, they're starting to converge, even though the stock market's going up. Let's take a quick look at the daily again. Where are we with all our technicals? Well, this is, you know, certainly number 1. Number 2, in and out, in and out. Number 3, you know, there's still a big gap here. Excuse me. There we go. Well, I got too much going on here. Big gap there. Fibonacci, you know, 0.23 hasn't even been hit yet. 200 EMAs down here, 50s EMA down here. So I'm hanging in there, but I got to start thinking that things are turning. And are they going to turn for the worse, or is it just going to be sideways? I don't know, but that's how I use my stochastic. All right. I think let's break there. Maybe we'll do this again, one more segment. We didn't cover a lot of our stocks. You can look at them yourself. If you don't have stock trading, you know, there are graphs on the web. I don't know if you have a trading account. A lot of people are in, you know, the younger folks are into Robinhood. You know, that's your choice. I mean, Robinhood, you know, it's got some good things. I don't know if they have a graph or not. I got a little nervous about Robinhood just because when the market was really swinging, and especially those meme stocks, they stopped you from trading. A stock can stop trading, but the platform, if it doesn't allow you to trade, that's really bad. But I don't know. I hear a lot of good things about it. I think TD America has one. Fidelity has one. Schwab has one. You don't have to put a lot in the account. I use Schwab. I'm not propagating that at all. That's, you know, I have been in Schwab for many years. I can't even say it. Street Smart Pro works. Fidelity's graph is really, you know, charting system is really good. I've seen that. I like it. I think, you know, so there's a bunch out there. If you want, email me. I can give you some, you know, websites to check. I'd be happy to help out. And quite frankly, if you've got some questions about this stochastic indicator type thing, I think it's a really powerful tool, and you don't really grasp it, or you've got questions about it, email me. We'll get on the phone. We'll talk about it. We'll see if we can kind of clarify up your questions. I'm not the greatest teacher. I know what's in my head. To get it out through my lips, you know, sometimes doesn't work out so well. All right. But, you know, I'd be happy to spend some time on the phone with you, right? Jim.net, search at Comcast.net. If you're watching me on YouTube, please hit the like, refer me to your friends. And let's see. And any comments? Sure. You know, good or bad. I think there was some stuff there on Bitcoin. Again, I don't buy or trade Bitcoin too often. And it is what it is. And I'm not, you know, people who are posting, you know, especially pay for websites, I'm not at all endorsing any of those at all. It's not coming from me. My stuff's free. That's all I can say. And what's that saying? You get what you pay for. Input in previous segments, absolutely. Particular stocks, you know, if you want some input, as long as it's not a meme stock. I'll do what I can. If it's something that's really hysteric, whatever that word is, that's not well known, I may not be able to help you too much. But tell me if you're in it, what point you got in it, what price, or if you're thinking about getting in it. I'll try to give you entry and exit points if it's a stock to avoid or not. Topics you would like to be covered. This is really helping. Some people are emailing me, and I'm just archiving that information, and we'll go from that. I've been able to get stuff out on a daily basis. The next couple of days, I can't say that I am. Just be careful trading out there. The market's really crazy. Everybody's calling for a bounce. So, potentially today was not really a down day. I think the Nasdaq was up a bit. We may be starting to flatten out, going for a bounce. So if you are shorting and just getting into shorts, be really careful. Have tight stops. Like I said, I'm short, but I've been short for a while, and I've got some room for it to oscillate here for a little while. But if short sellers get squeezed and they get forced to sell, especially if they're margin borrowers, they're forced to sell the cover, and then on top of that, it just drives the market up faster. So that could be an elevator ride up. So you got to be careful. What else? I think that's it. And till the next time, I'm James Twomey. This is the Twomey Stock Market Report. It's the basement tape versions. It's not a whiz-bang high video production. It's just, think about it. We're sitting at the kitchen table and we're chatting about stocks, but I'm trying to give you the Twomey investment process, some of the technicals to back up that process, to help you in case you become biased on your process. And then there are a lot more indicators to throw at you. And then we can also look at fundamentals. Okay. Thank you very much for listening. Hit that like button. This is James Twomey. Have a great day.